Good morning, everybody. Welcome to the Game Plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, we have some stuff to discuss. Number one, we got the ADP private sector jobs data out this morning. That's the precursor to the non-farm payrolls report on Friday. We'll go over that. We also have some key stocks, CrowdStrike, AeroVironment, which is a drone company, both collapsing down sharply today. The markets in the overnight trended higher after Trump's speech, but this morning that ADP private sector number is causing some concern. Follow me over to the big board. Let's get into the data and the charts, and that's what we do here at Verified Investing. So ADP, guys, which again is private sector employment, it came in at 77,000. So that's much less than the anticipated or forecast 141,000. Now, what's the problem here, right? So if this was 6 months ago, the markets would be ripping higher because they'd be like, oh, the Fed is going to cut rates. We're going to see rates come down. This is fantastic. The problem is we now have inflation upticking and the Fed cannot cut rates. So this is the handcuffing that I've talked about for the last 6 months that I thought would start to occur. So what we actually saw here was your late day sell yesterday in the S&P. So we had kind of been rallying up. In fact, the S&P and the NASDAQ yesterday intraday had rallied up beautifully. Nice little intraday topping tail right here, technical reversal signal. And then we had the sharp 30-minute sell into the close. After hours, the markets kind of traded up and sideways nicely higher into and through and afterwards the Trump speech. But then this morning, right here is where we got that ADP private sector number. And you can see the markets have turned back lower. Now, where we currently sit is almost exactly where the markets closed yesterday. So essentially the S&P is flat. Now the problem here is that we did confirm a breakdown on the daily chart on the S&P 500. So again, it is now a confirmed breakdown based on yesterday's close below this upsloping channel or trend line. And that tells me that at this point, the bias has now flipped to generally negative for the markets from the uptrend. So again, just think about it simply, like what is an uptrend? Well, it's when markets stay within a zone and continue to climb higher. Of course, there's pullbacks along the way, but that's been an uptrend since 2023. Problem is, this is the first time we have now broken and confirmed below that trend. What does that mean? It means it's a break of trend, and it means the market is now vulnerable to further downside. And that's something we'll have to monitor very, very closely here to kind of see where things go. But right now, again, we're basically flat after being up. The S&P futures, by the way, were up as much as 35 points overnight, maybe even more than that. But now they are flat following the private sector jobs report. And that's going to make people very nervous for Friday's non-farm payrolls report that comes out at 8:30 on Friday morning. All right, so again, right now we're looking and seeing where the market goes today. Are we going to continue to collapse down, or can we get some sideways chop? The key here, though, if we start to bounce a little bit, this trend line, which has now been confirmed below, now becomes major resistance. That's what the confirmation signal tells you, is that it's a break in trend and that this solidifies now as a major resistance line. So even if we trade up there, the probabilities of the charts tell us that rejection should occur off of that level. And that's why it's a break of trend and a confirmed break of trend at this point. All right, let's get into some of these other charts as we get back to the computer here. And we'll just take a quick look at the QQQ. Qs today, same kind of deal, basically around the flat line here. Again, we're seeing stocks ranging in the mega caps from neutral to positive to fractionally negative, but nothing too much yet. Notice this trend line I put in yesterday for you guys. This one goes back to early January of 2023. This trend on the NASDAQ is still holding, but again, we are closing in on that trend line. And if this were to break, that would be another indicator of a market that is likely in a down pattern versus an uptrend. All right, a couple stocks in motion today. CrowdStrike reporting earnings yesterday after the bell. Big drop. The stock's been chopping in the overnight and into pre-market here, as we can see, even inching up just a little bit. If we go to the daily chart, I do have a level I am watching today. It is a little bit lower, but look at how once we got up here, all of these lows essentially are right in alignment. And so what I do is I say, okay, well, if that held before and price has gone away from it for a while, technically speaking, as a day trader, that should be a support level again today. Now, it's still a ways lower, basically almost $30 lower than current levels, but you never know. In this market environment, $30 or under 10% move on CrowdStrike lower is not outlandish, and so I'm going to keep a very close eye on this level. Speaking of which, Tesla yesterday, guys, I gave you this level yesterday, 262. We went right there, pierced it briefly, and then got a nice little bounce. So that was a nice call from yesterday's game plan on a bounce on Tesla, and even on names like NVIDIA, good bounces off of those lows. All right, another stock getting pounded this morning. Take a look here. We have AeroVironment. Now, AeroVironment is a drone maker, so it's unmanned vehicles, essentially flying vehicles and such. But this one, again, nasty earnings, or it was more the guidance. They beat on, I think they did miss on earnings. But either way, the point being is that it was not as good as Wall Street anticipated, and the stock is down at 109. Now, this one I'm very intrigued by. So number one, just in November, the stock was at $235. It's trading below 110 now. So this is now a 54%, 55% drop in price from those highs. So now what do? I say, okay, well, it's already very sharply lower. We've seen it come down. So now where are the levels to watch? First level I have, there's a gap fill and low pivot right here. And that level is my first one. It's around 105.75. We're not far away from that. In fact, we're at 109 and change, so only about $4 away. And then the second zone here, there's a zone here, what I would call a trading zone. It's basically $99 down to the gap fill at 95. So these are levels where I would say this first one's day tradable. I might even consider a swing trade if it gets down to this, let's say 95 to 98 level, right in this vicinity on AeroVironment. And again, the thought process here is pretty simple, right? Is that if ultimately drones, unmanned vehicles, that's the future. Right? So again, this stock again is a profitable company. It's not a big company, but it's a profitable company. It's discounted now 55%. If it gets low enough, I'm going to start thinking about a longer term position, not only a swing trade, maybe something more, but it's got to get down to those levels. And I think it will inevitably if the markets continue to sell. All right, let's take a look here at Apple. Apple, again, I wanted to show you this to just kind of keep you guys in the loop on Apple. Apple, again, has a short-term head and shoulders pattern, but I am watching, again, I have down levels here, and I want to just show you that any dip in Apple here would be a big support level. Notice the flat top, upsloping line. Now, you might say, wow, it's way off of that level, and you're right. But again, just keep in mind, we have a classic head and shoulder pattern here on Apple. All right, right here. Pretty clear as day. It has not triggered yet. Triggers on a head and shoulders pattern would have to be a break of the neckline to continue to push that lower or trigger it. But this would be a bounce level. Wouldn't be the end of the day, though. I mean, this wouldn't be the end of the move. This would just be a significant swing trade level. And then ultimately, again, if you measure it out, this probably goes down all the way to about $170, $170 on Apple. Quickly, just looking at Amazon, I want to show you this chart because it's a great example of how these wedge patterns, when they break, they're very much a waterfall effect. So again, you can see the trend up. It was staying underneath, beautiful trend line right here. When it breaks, it has the big move to the downside. Where would this meet support? I have a big level I'll be watching around 193 all the way down to about 187 right here. So again, that'll be a level that I scout out for a swing trade long. All right, let's talk about this one right here, folks. This one is WeRide. This is kind of one of those charts that I'm going to go to the big board to talk about this one here. But this is a chart that it's not a huge company. I think it's about $4 billion. It's kind of on the range of Celsius, on the range of Wolf, which have been favorites in the past and have had huge, huge moves off of when we've talked about them. But this one here is interesting because, again, this stock was just kind of going sideways, minding its own business. And then all of a sudden, it goes from basically $17 to $44. What happened here? Well, in the earnings announcement from NVIDIA, they said, hey guys, we've sold some of these other companies, but we've now bought into WeRide. WRD is the symbol on this. And once it was announced that NVIDIA now is invested in this company, the stock just ripped up. Now, for me, I was too late to the party. I didn't know that news ahead of time. You had to be an insider to know that stuff. I don't know that stuff. Okay, but the big move up and now the retrace. This is what we call a full retrace to essentially the scene of the crime, right? That's what's happened here. So if we look at WeRide, it has come all the way down from 44 right into that level. So listen, the market conditions obviously aren't as good, but in my opinion, this is now, look at all this support right here, and we know that NVIDIA is invested here, and that to me tells me there's a high probability based on charts. This is a gap fill. we should see some sort of bounce back up. There should be a reversion trade here. Again, you do a Fibonacci, it could go back to like the high 20s. I'm not sure about that. I guess anything is possible depending on market conditions. But do I think it could go to the mid to low 20s? Heck yeah, from 17, no brainer here. And again, I do have some. I picked it up in my service yesterday as well. So this, again, a beautiful chart setup that should be on our radar, right? These are, and again, I want to be clear, has nothing to do with the company, right? I mean, like WeRide, NVIDIA investing, that's good to know. But for me, this could be a chart of any commodity. It could be a chart of any stock. It could be a big stock, could be a little stock. It doesn't matter. It's the pattern, the fall into support and the bounce, right? If you drop a ball from up here and it falls to the floor, what happens? Just the retrace natural bounce. And that, again, as a trader, just strictly as a trader, I'm not passing judgment if this is a long-term hold. I have no clue where this is going to be in a year from now. But as a trader, that's a level that I pay attention to. All right? So it'll be interesting to follow that one and see if we do get some sort of technical bounce. Now let's look at Bitcoin. Excuse me, guys, I am fighting a little bit of a cough here. But nonetheless, if we look at Bitcoin creeping up, Bitcoin yesterday morning was sharply lower than when the stock market kind of rallied off the lows. This came off of its lows. It continues to push up a little bit. All of this price action, and I'll even go to the big board to just, have you guys fully understand this. This doesn't matter to me. All of this, remember when we were in here? And we were just chopping in here and going like this and then like this and then like this. I basically came in here in the game plans and I said to you guys, doesn't even matter. All I care about is this level and this level as a trader, right? And I said when it breaks this level, it likely heads down. So now that it's broken, the bias remains negative. The only thing that would change me would be pure technical. Remember, this is all about probabilities and technical analysis. If we reconfirm back above this line, then it recaptures that line and could make its way up here. But right now, all of this doesn't matter. It's the downside support at basically 75 to 73. That's your favoring unless it reconfirms above this trend line. So again, the point here is that we all have our hopes and dreams. We have our favorite stocks, we have our favorite commodities, we have our favorite cryptos. And for us as traders and investors, you have to, if you want to be long-term successful, right, and be a trader, more of a swing trader. Listen, if you're a long-term investor, I guess, looking at 20-year horizon, you just want to pick quality names and hope that they do well and you'll ride the ups and the downs. No big deal. Markets generally go like this over time, right, sideways to up. But if you're someone like me who's swing trading, then you have to get rid of all your likes and dislikes on a company. It doesn't matter who runs the company. It doesn't matter what they produce. It doesn't matter any of that. You look at the chart. And what you need to know is the probabilities. And when you're below here, it favors downside. And if you reconfirm, you have to be okay with pivoting and saying, okay, well, it reconfirmed. Doesn't matter what I thought, what I felt. It reconfirmed, bias flips back, or probability flips back to the upside. And again, this is something that I work on nonstop, constantly. I've gotten very good because I've traded now for 26 years in total, but it's something that I always am working on, just like I work on managing position size and all of these things. It never gets over or never finishes. You never complete that journey because there's always room for improvement. And that's the important thing as well, folks. Those of you watching, you're watching and hopefully you're absorbing a lot of this information. Just keep absorbing. And there's always something new. Start looking at charts. Start analyzing them for yourself. Think about levels. Start getting in that logic mindset of technicals versus emotion. It will change everything about how you invest and trade and honestly make you a much better investor and trader. All right. Let's get back to a couple of these other charts here. Let's just flip over to oil real quick. Look at oil. I've been talking about the major level of 66 being hit, and sure enough, we are very close. We're now trading in the 66s, the big level here. And folks, if we were to break and confirm below, let's say 66 to 65, that would be a big deal to me. I actually expect a bounce. I don't know if I'm gutsy enough to go long off this level of 66 to 65, but eventually I expect it to break down. It is getting a little short-term oversold, so don't be surprised if you get a little uptick and then the breakdown. But either way, here we are coming into the level I've been talking about. All right, gold, let's take a look at this one here. Gold today, after 2 up days, pulling back slightly. There's nothing new here, folks. Again, to me, short-term bias is slightly negative down to here, unless it takes out this high right here, and then it zooms up to 3,000 plus. But again, either way, mid to long term, I still think it's going higher, north of 3,000. It's just more short term. And really what I'm seeing here now is this, folks, right? So A lot of people want to learn, and I congratulate you on that. I think it's amazing. So you have the short-term move down, and then this is an inside bar pattern. That's generally, probability-wise, that's your next move is down. The only thing that would change that, and remember, there's always a place where it fails. If you get a daily close above this high, then what happens? You probably go right up here and tag this trend line there. All right, next up, let's look at silver real quick. If we bring up silver, let's see what we have here. Silver was up more overnight. It's kind of giving back a little bit of that. And again, silver, as I've said to you, I don't have a good read on this other than that it's stuck between this trend line here and this flat bottom. So it's really watching to see if we break here around 33, it probably retests the $35 high. If it breaks here, then you have a significant move down. I mean, you'll have support at 28.80, but really this downsloping line would be a level where I would consider going long. All right, let's go to natural gas real quick. Of course, we can't miss natural gas, which had a huge move yesterday, folks. I did add to my nat gas short there. Love how this has worked so far. Pierced the gap fill. This was a gap fill. If we zoom out here, folks, see the gap right here? I know it's hard to see. I can try to zoom in a little bit on there. So this is a gap. And really the only time you get gaps on nat gas is from like a Friday close to a Sunday night open. So this was right here. The gap has now been filled. It was filled yesterday, right? And if we bring this over here, it was filled right here, and it's so far it's rejecting price overnight and yesterday as well. So I'm watching to see, does it confirm above 440? If it confirms above 440, there could be upside to 450, 460, even $5. But this is really your game time level right here, and you would remain with a negative bias unless you confirm above that line. Then the bias flips, the probability flips, and it moves to the upside. All right, just flipping back to the SPY. Looks like we've caught a small bid here since I started the game plan. Yep, just a 10-minute uptick candle. We're just slightly up on the day. And again, folks, I'm watching AVAV, CrowdStrike. We'll see what happens during the intraday sessions. Yesterday, we had 10 for 10 in the Apex Live day trading room. It was a tremendous day. Volatility like that is amazing, folks. The more volatile it gets with these bigger moves, the more opportunities for swing traders and day traders. And in fact, you know, again, whether it's WeRide, we'll see how that one does, but SMCI was an amazing profit yesterday in 24 hours as a swing trade. It's great times. Scary for a lot of longer-term investors, right? A lot of things, tariffs and this and that. But overall, if you're a swing trader and you know the charts, this is your money zone. You want volatility up to a certain point, of course, but volatility is your lifeblood to profit. All right, you guys have a wonderful rest of the day. I will come back and see you guys. I think tomorrow morning, Drew's going to handle trading the close today. I will talk to you then. Take care.